Target Trading Academy.
Good afternoon, everybody. Preston Vogl here at Target Trading Academy with today's Micros Market Recap. Let's get right into it with the date. It is Wednesday, February 8th, just at the close in New York. Let's start off with oil. So oil opened gap up from its close, meaning that we're higher than where we had finished in the pit session. So pit to pit, we finished higher. And so we opened above, hence the word gap up, than the close below. And that was just around here. So we had initial sell-off, hit this support of the HVA edge. Let me get this cursor out of the way for you. This edge of the HVA had a bounce or response off of it, tested those opening highs. They got shot down. They hit this edge once, hit the other edge, and then bounced up again. Now remember, these edges or these HVAs, high volume areas, are drawn the night before the next day's trading activity. So keep that in mind. They're not drawn during the market, so they're not intraday levels. These are drawn the whole night before. Ultimately, they did make that move back up and finished net positive once again. As far as gold goes, gold opened above its close, but within its range from yesterday, just at that edge of it. And it had that initial move down. That close was around here. They had support or buyer step in and drove it up. New highs. That was most likely with the news that had come out. And then it got slammed, getting its close. And then it responded off that HVA once, twice. And then you can see the response on the resistance edge of it there. So if you're interested, again, in these levels, stay tuned and I'll tell you how you can get them onto your charts the night before. But ultimately, gold did finish positive for the day. So it is net positive, both the oil and gold. As far as our equities go, we opened in the very large range that we had yesterday, but below the close of both the NASDAQ and the ES. So we had an initial move up. They couldn't break through this HVA edge. They tried 3 times and failed. Ultimately, they drove it down. It was a slower day, I will say that. It was very choppy, especially in the afternoon. It was a snooze fest and just very consolidated. I mean, if you consider the range that we had yesterday in the ES, which was 90 points, I mean, when I first started trading, the average move, daily average move of the ES was, just over 20. Well, it was more like 15, 18. Before that, actually, my father, when he was trading, I don't know how many years ago, that range was 3 to 5 points max in a day, and now 90 points in a day is just it's unheard of. And the past year and a half or 2 years ago, the range was closer to the 30 points a day. So just that 90 on average, and then in the first 30 minutes we did 30 points in a range. It's ridiculous, but it's just the volatility is going up, and as such, the spread increases. But even though we have an increased spread, you still have those congestions, and those congestions are moving on average more than they have in the past. That's just because there's more participation. But with that being said, you can see the response at these levels, especially right now, and given how slow it is at the moment, not much going on. But we did make a move down in the ES away from the close, but inside that very large range, ultimately finishing net down in the ES. Similar story in the NASDAQ. If I just scroll back here, you'll see that we opened in the range, but below the close from yesterday. And had an initial move up, and it took a little while to get above this HVA. They had some bleed through into it, but ultimately the sellers did step back in, and they did make new highs. And then you can just see the response at this level as it was responding off those edges in terms of support, opposite HVA in terms of resistance. And then ultimately, yes, it was just driven down, and then it just got real slow. But again, look at the response at these levels. Wouldn't you like to have these onto your charts the night before so that you are ready to execute with your entries based off the levels alone? Now, granted, we have a whole methodology that we teach here. We are an education company, or a trading education company, I should say. So we don't make anything other than these levels and educate you on the methodology and how to execute off of them. The choice to trade is yours. The choice to execute is yours. It is far better to teach a man how to fish than it is to give said man a fish. So we do not give signal callings in the room. We don't tell you to go short or long. We teach you how to trade so that you can be independent of anyone else and be your own boss. If that's something that's interested or interests you, feel free to reach out to us. We are Target Trading Academy. You can find us online or go to our Facebook page, either location. Get in touch with a consultant. They'll gladly show you what we do in our rooms each and every day, and you'll be able to see for yourself why we are the #1 trading education company in the world. We look forward to seeing you there.